Rising interest rates aren't taking the shine off this jewellery store's sales just yet. But in these times of financial uncertainty, more customers are seeking a safe haven in gold.
We've found that people are coming to us for really special pieces for either occasions, birthdays, engagement rings, but also to treat themselves, I think.
The owner is worried about what'll happen when the Reserve Bank's back-to-back rate hikes start hitting her customers' wallets. She's also got her own mortgage to pay.
I would say that, adding extra stress to people who could be spending their money in the local economy doesn't seem logical to me.
But that's exactly what the RBA is trying to do. It wants to slow spending, announcing another 0.5 percentage point hike to take the cash rate to 2.35%.
Now, this will be very difficult news for a lot of Australians with a mortgage.
The RBA Governor, Philip Lowe, admitted higher interest rates are putting pressure on household budgets, with the full effects yet to be felt in mortgage payments. The nation's biggest lender says it takes around 3 months for an increase in the cash rate to be felt by borrowers. The Commonwealth Bank says that means the Reserve Bank is effectively flying blind and warns of a risk to the economy if the aggressive rate hikes continue.
There is always a risk that the Reserve Bank goes too far, and the Reserve Bank is well aware of that. As the Governor has said very recently, it's a very narrow path that they have to walk, and there's a lot of uncertainty on that path.
The Reserve Bank is warning of more rate hikes ahead, but there are very subtle hints it may soon slow down its increases.
I think it's probably more likely to move towards the 3. Anything below that is probably still on the low side, historically.
If lenders pass on the latest rate hike in full, homeowners with a $750,000 mortgage and 25 years left on the loan will see their repayments rise by $216 a month, which means they're now paying $900 more than they were before the RBA started increasing rates in May. Daniel Khan's variable mortgage rate has gone up from 3 to almost 5%.
Monthly repayments have been quite substantial since the jump, but we've just done a whole revamp of our expenses, making sure we're not spending on unnecessary things.
Daniel and his partner bought their first home in Western Sydney in January 2021, when the market was strong. He's nervous about how high rates could go.
Increasing them quite a lot might cause a lot of people to have major lifestyle changes, and it might not be for the better.
A concern on the mind of many people who borrowed big when interest rates were at record lows.